Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Bitcoin and Ethereum are experiencing their worst sell-off since July 2024, with widespread losses triggering nearly $4 billion in liquidations. Market leader Zcash faces an existential trust crisis following disclosure of a 4-year-old vulnerability. Bitcoin is trading around $62,490, down 14.5% over the past week. Ethereum has declined to $1,674, dropping 17% in the same period. Fear and greed indicators hitting extreme fear at just 12 out of 100. Michael Saylor explained the sell-off, pointing to massive capital rotation into artificial intelligence. He noted roughly $400 billion has flowed into AI infrastructure over the past 6 months, while Bitcoin ETFs have experienced over $4 billion in outflows since mid-May. However, his company's strategy sold 32 Bitcoin worth $2.5 million last week, its first sale since 2022, adding to market anxiety. Spot Bitcoin ETFs broke their 13-day outflow streak with $3 million inflow on June 4th, though analysts called this statistical noise. ETF assets have fallen from $104 billion to $80 billion during the outflow period. The Zcash situation represents a different crisis. Developers disclosed a critical vulnerability in the Orchard privacy pool that existed since May 2022. The bug could have allowed creation of unlimited counterfeit ZEC tokens without detection. Zcash crashed 40% from around $630 to $387 following the disclosure. The emergency patch was deployed by June 1st, but damage to confidence may be lasting. Because of Zcash's privacy design, developers cannot cryptographically prove whether the vulnerability was ever exploited. Arthur Hayes sold his entire ZEC position, stating that inability to rule out counterfeiting is incompatible with what privacy coins require. Meanwhile, institutional adoption is advancing. Coinbase announced the first Fannie Mae-backed mortgage using Bitcoin as collateral. A Michigan couple pledged Bitcoin for their down payment while maintaining ownership, avoiding capital gains taxes and keeping future upside potential. The program will expand nationally in coming months. Major US banks are launching a counteroffensive against stablecoins. JPMorgan, Bank of America, and Citigroup plan to establish a shared tokenized deposit network by mid-2027, operated by the clearinghouse. The system will digitize customer deposits as blockchain tokens, enabling faster 24/7 transfers within the regulated banking system. Standard Chartered warned that time is running short for the Clarity Act, the comprehensive crypto market structure bill. Despite clearing the Senate Banking Committee on May 14th, the bill faces a tight legislative window before midterm elections. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.